Alright guys, what do? It's your boy Exit back with another video, and in today's video I'm just gonna go with you guys a couple stocks for your portfolio that I think are grade A, like Millie rocking type grade A, like on any block. I Millie rock on any block. Like must have. If you got it, add it. If you add it, you got it type of stocks, you feel me? But without a doubt, I'm going to help you guys and show you guys some of these stocks to have to guarantee you profit. Of course, it will be over a long period of time, but nevertheless, profit. Let's get into the video. Alright guys, what it do? It's your boy X here. Today we're going to talk about a couple of stocks that I think are must have, and I'm going to explain to you why I think they are must have, and you can determine, do you think the same, and if so, you can potentially add these to your dividend portfolio. Alright, so before we get into the video, you know I'm going to have to ask for it. Subscribe to my channel. Yes, you thought I was going to say hit the like button. You can do that, but first, subscribe to my channel. Appreciate you. You get just for subscribing. For you. Spirit fingers.
These are not spirit fingers. These are spirit fingers.
Yeah. You're welcome. Alright. Now, without further ado, you're just gonna hop right into it. So one of the stocks that I think are a must-have in anybody's portfolio is one or two of these ETFs. And the reason I say this, like I said, ETFs are very diversified and they can help cushion the blow when market crashes. And in volatile times, like in today's time, with everything that's happening with the, T virus or whatever, you will really want to be diverse, because whenever things get real, you'll be safe. So first stock that you most definitely should have in your portfolio would be ETF BTI. BTI right here, the Vanguard Total Stock Market Index Fund, which is currently $170, or you can pick BOO. Vanguard S&P 500 ETF. Now, the reason I say both of these, because they're pretty much tick for tat, and the reason I say this, BOO, which is the S&P 500 ETF, that is the one that tracks like the top shebang companies, all the top, Amazon, Google, Tesla, Netflix, things of that nature, all the shawam companies. This is what this ETF tracks. So you guarantee some good stocks holds, and most definitely you're more than likely these big companies sways the market because they have so much influence. So by default, as long as the overall stock market going up, your portfolio should do the same. You're welcome. And like I said, the next option, was on the backside of that was BTI. Now this one tracks the overall stock market, all stocks, all of them. And that's why I tell you, more than likely, out of all the stocks in the stock market, as long as the stock market is going up, you good. So what did we learn? These are two ETFs that are tick for tat, and pick one. Do your homework, do your research, figure out which one you would like best. If you're wondering which one I have BTI. All right, so the next stock we're gonna talk about, I'm gonna give you a twofer again. You wanna know why? Because at first I was just gonna pick some random stocks that I hold myself, but then I picked the ETFs and it was fun doing the 1 to 2, so I'm gonna keep it going. Coca-Cola, Pepsi. Now, I know what you're thinking. Okay, yeah, but why? Both of these companies have outstanding dividends, and their dividend streak and continuation to increase is unparalleled. So the choice is yours, and the reason I picked these two, pretty much Coca-Cola, you know, Warren Buffett just, you know, patting them at this point. You know, they're one of the kings of dividends, relentless, 40 plus years doing it big. And if I'm not mistaken, the dividend's around 50 cents, 52 or 55. Matter of fact, I got you. Negative, I was big wrong. 41% is their dividend per share, right? Right. But like I said, it's one of the dividend kings. They're infamous for making sure they pay out the dividend, and the company is not going anywhere no time soon. And these are the individual stocks that you want to pick. Next, we will have Pepsi, which of course is an amazing company to have. You want to know why? Because they so safe and they got these dividends. Now, Coca-Cola gonna run you about $40. Pepsi shares are gonna run you about $138 currently, but Pepsi do pay out more in dividends. Now, Pepsi pays out $1.02. So Pepsi's $138, but it pays out $1.02, while Coca-Cola is $40 and it pays out 41 cents. These are the main differential, and one of the big differentials when you start to really look at their stats is, like I said, they're both good for dividends. They're going to pay. They're not going anywhere anytime soon. Coca-Cola growth rate on their dividend is extremely slow. They do grow and increase, but at a very slow percent. Now, Pepsi, on the other hand, they grow a little bit faster, and that's why their stock price is just a lot higher. Like Doug said, a tweet bit, it's a lot higher. But also it's the payout. So both companies are good. Both companies are great. It's really personal preference which one you pick for you decide. All right. One more double time stock that is a must have in your portfolio if you deem it worthy. Of course, all these decisions are optional. Like I said, always do your due diligence. But yet again, we're gonna hit you with another twofer because I'm enjoying it right now. And we got Home Depot and we have Lowe's. Now, Lowe's dividend growth rate is pretty significant high right now. We got 15%. The average price now is $166, right? Yes. Now, when you talking about dividend payout, consider they've been paying dividends for 57 years, uninterrupted and increasing. Now, also with that, they pay out 60 cents per share, right? Ooh. But let's look at their companion here. We got Home Depot, right? They dividend growth rate is 25%. As of right now, the price of it is $279, right? And they have been paying a dividend for 32 years uninterrupted, and they've been steadily increasing that dividend for 11 years uninterrupted. Now, Home Depot share dividend is $1.50 per share. So yet again, Home Depot does pay out more in dividend, and the price is higher, and the growth of said stock is higher. So, like I said again, two great individual stocks to have, amazing companies. It is really user preference. So, utilize their preference. Make your choice, the blue pill or the red pill. All right, guys, and the last twofer we're gonna have for you guys are, of course, we got Mastercard and we got Visa. Yes. Like I said, two amazing companies, two great individual stocks to have. We're gonna start with Mastercard. Mastercard dividend growth is sitting at 29% last year. Their current stock price is $338.83. Now, the thing about that, Mastercard, they have been paying dividends uninterrupted for 13 years, and that dividend has been growing for 8 years. Now, with that being said, Mastercard dividend is 0.40 cents per share, right? Which is pretty good. Like I said, they got their dividend going over 10 years consecutively, smooth. Now look at the Verizon. Verizon is growing 19% last year. Their stock price, $201.46, right? Big hype. Now along with that, they have been paying out dividends for 11 years. And they have increased their dividend for 11 years. And currently right now, their dividend per share is 30 cents. Now all these companies are tick for tack. Of course, they have variation in prices and variations in dividend growth, but they are all amazing companies that have dividend consecutive payments and dividend consecutive growth. Some are more expensive than others because some growth is higher than others, but all these companies are amazing companies to have. It's really user preference, whichever you personally like more or decide to add to your portfolio. But nevertheless, all these options are amazing ads. Look into them. Look into them. But like I said, I'm just helping you guys pick some amazing stocks. So look into them. Like I said, you can look these up on dividend.com. You can just look them up on Yahoo Finance. You just Google them also, or look them up in your brokerage and just check the graphs, check the years, see the angle in which they grow. Make your decision. Hope you guys have all the luck in the world, and to keep that network growing. And do not forget to subscribe to my YouTube channel, or definitely like this video. And it's your boy X.